I get the question, Garrett, what's going to happen in the real estate market in 2023? We're heading for a crash. What should I buy a house? All these questions going on. And you know what? I may have this crystal ball here, and I'm going to make my predictions of what's going to happen in the real estate market in Reno Sparks in 2023. Let's take a look. We're going to go over 5 different topics today: inventory, interest rates, prices, foreclosures, and of course, should you buy or sell a home in 2023? Let's talk inventory. Well, first things first, you can see the historical or the history here since 2012 of what's happened. And you see that black line that goes all the way across? Well, what that is what I call pre-COVID average. So we took all the numbers from 2012 to the end of 2019 and averaged out what that inventory was during that time. And that's what that line is. I don't like to compare anything during COVID, during 2020 after, because as you know, it was a lot different time and it's not something that's considered a really good number to recall back to. So I'm comparing it to all previous stuff and how we compare to that. More of a normal market, right? So you can see we're actually trending downward at the beginning of the year, or at the end of 2022, we started going back downward again on inventory. We had saw it big spike up, and now we're going back down. So we're still below the average of what we were pre-COVID. So inventory is still historically low compared to that average at least. So my predictions for 2023 and what I think is going to happen is I think inventory is still going to stay low. We'll probably start to see homes start to come back on the market, but we're not going to see that happen until interest rates start to drop. And I'm going to get into interest rates in just a second. But once, I think a lot of sellers are holding off on going on the market because they're worried about giving up maybe a lower interest rate to get into a new home. So once those interest rates start to drop, I think and the market starts to move a little bit more, we're going to see more sellers come on, more inventory come on as well. Now, interest rates were the subject of 2022, and we're going to continue talking about them here into 2023. Interest rates doubled last year from the beginning of the year to the end of the year. Look at that 3.22. Wouldn't that have been great? Well, while they're still high, we're lower than the peak that we had back in around October. We peaked out in the 7% range. And you know what? It's still historically low compared to previous decades, but still, when you compare it to a 3% interest rate, I understand. It's not as fun to pay that higher payment. And so we have seen this go downward, and let's take a look and see what the big players are predicting for 2023. So here's Freddie Mac, Fannie Mae, the Mortgage Bankers Association, and National Association of Realtors, and their predictions for the year. And we averaged them all up of all 4 there on the far right for you as well. Now, you can see I wouldn't pay too much attention to the actual percentages to a T, but just notice the trend. I want you to focus on the trend. They're all going downward every single quarter. Even the average, or if you look individually, every single one is going downward each quarter. We predict interest rates are going to continue to go down. Nothing extreme, but they're going to go downward, which is good news. Now, a lot of this relies on the fact that if what the Federal Reserve is going to do, as you know, they've been hiking up interest rates all of 2022 essentially, with even, I think it was 4 different hikes that were 75 basis points, all in a row. And we actually ended the year in December with a 50-year basis point. So it was the first less one since, like I said, it was 75, 75, 75, 75. And we finally got down to 50 basis points, or 0.5% essentially. And what that means is, and what that tells me is, they're starting to slow down on those hikes. Now, they're going to hike them again potentially. The first half of the year, they might do another hike maybe, but my guess is if they do hike it, I'm guessing maybe 25 basis points. That's probably my prediction, and then they'll start to probably hold tight for a little bit, make sure the market's staying steady, and then I think by the end of the year, we're going to start seeing the Federal Reserve start reducing their rates. Now, the Federal Reserve rate hikes aren't directly affecting these. Now, they're a little bit correlated. Obviously, if they're hiking up a bunch, we're going to see these interest rates go up too. But 0.5% change isn't going to change interest rates for your mortgage 0.5%. So just know that. But if you have questions on that, you can always message me below and I'll be happy to answer that for you. So again, as I predict, I think that we're going to have interest rates go down by the end of the year. I think we're going to be into the 5s. I think one thing that's going to affect this and be kind of the factor that will change how quickly it is how the inflation reports are. Now, we ended the year actually on some good inflation reports and everything so far. The first couple weeks here into January are we're seeing the inflation rate and all these reports are coming out, and it's been looking pretty promising to have these rates come down. So as long as we continue to see that trend of inflation slowing down, we're going to see less likely of rate hikes and things like that, and everyone's going to feel a little bit more comfortable. So that's going to be a big key factor in all of this, though, of how quickly we're going to get into these 5s. Let's talk home prices. Now, if you watched my video from last, or just a couple weeks ago, actually, which you can make sure you, if you haven't hit that subscribe button, hit the subscribe button below so you don't miss any of my content, by the way. But I posted a couple weeks ago my video on how we ended the year. And you can see, you saw this graph on here, and you can see that we had hit our peak earlier this year, or earlier last year, and at $615,000 was what the highest hike, or the highest point is. And at $615,000, we started to go downward from there. My prediction is we're going to continue that trend of a downward slope for the next few months. Probably the first half of the year, we'll probably see it start to slow down a little bit each month. So, but by the end of the year, I do predict we're going to start to see a little bit of an upswing from that. I have already seen some more activity on the market so far, just this first couple of weeks into January, and people are starting to, I think with interest rates have gone down a little bit more, people are starting to kind of look around and be like, hey, you know, maybe I should jump in now. So I do think we'll start to see that as that demand starts to kick back up. That's the big key factor. We need that demand to get home prices back up. Now, what do the big players say about this and what they think? Well, you can see on the slide here that they are, I was surprised by Realtor.com here, and I don't necessarily agree with that, actually. And there's the home price expectation survey of 2.6%. And then we have a few right there kind of about break-even point. And then Zelman at the far end here is saying down 5% of home prices by the end of the year. So again, I'm thinking we're going to probably, by the end of the year, break even pretty close to. Like I said, we're going to drop some and then we'll probably start to kick up a little bit. So, you know, at the end of it, we might just about net zero at the end of that. But I'll talk about the advantages of that still at the end of this video. Now let's talk foreclosures. As you know, foreclosures were a big factor of the crash back in the late 2000s. And with that, and you can see how high it went up. 2009, 2 million foreclosures. Now you look at 2022, while it doesn't have that last quarter finished yet, it's much lower regardless compared to leading up to that crash. So we aren't seeing those foreclosures, but let's go into more detail on that. This is nothing like what was 15 years ago. If we look at all these key factors of what's different between these two markets, you can see we're nothing like that. Job cuts. We're starting to see some job cuts in some markets, but unemployment still remains very low. Total jobs, we have more jobs today than we did back then. Subprime loans, not very many places, if any, I don't even know of any personally, that are giving out any like subprime type loans. They're very strict on rules on getting qualified for these loans. So people that are getting these loans can actually afford to pay that mortgage payment. New construction is, while it's definitely been up over the last few years, it's not even close to where it was back then. Inventory is actually, and as you saw, we're still historically low and lower than that pre-COVID average. of, look at that, 1 to 1.2 million homes in the United States versus 3.8 to 4 million homes on the market. So we don't have enough homes out there available for buyers. The mortgage delinquency rate, people that can't make their mortgage, 3.6% versus 10%. And homes in foreclosure, as you know, almost 0.5%. So this is nothing like it was 15 years ago. So I don't expect anything of that affecting our real estate market in any drastic way in terms of foreclosures. I want to finish up this video with answering probably your biggest question. Should you buy or sell a home here in 2023? Well, I'll say it depends. And by depends, I mean, if you're looking to buy a home, let's just say you're considering it, well, I'll tell you what, there are less buyers on the market right now than there were a year ago. That's good news for you. I think that's a win. You're not getting outbid like you were with 3 other or 10 other offers against you. That's a huge win for you. Yes, interest rates are higher than they are last year. Home prices, though, have gone down, which I think is good news. Now, like I said, I think we're going to start to see an uptick towards the end of the year of it doing it. So we're still in the beginning of the year. Let's get you in and start looking at getting you in now in case they do start to tick back up again. Now, if you're thinking about selling, well, guess what? You're likely going to have to buy a home regardless afterwards. So that's all those pros I just said about buying, take that into account. But at the same time, if you're looking to sell, their inventory is historically lower than it was back in pre-COVID times. That means that's less competition for your home going on the market. Like I mentioned, we have seen our interest start to go up the first couple of months of the year, which is good news. And if that continues and we start to see that interest come up, we're going to get you some buyers in home. And if you price your home correctly today, there's still a chance that you could still get multiple offers. Now, I understand it's not what that peak was of $615,000 median home price last year, but I think we can still get you a strong offer for your home today or in the next few months if you're thinking about it. So a lot of opportunity still available. And if you have any questions on that, I'm putting all my contact information below. Please reach out to me, call me, text me, or email me, or even comment on this video. And I'll be more than happy to answer your questions and see if it's going to be right for you. It's not going to be right for everyone. If you're in the short term, need to buy a home and only live there for a year, 2023 may not be the year for you. But for those that are looking to make a home for themselves, I think it could be a good opportunity for you. So let's get together and let's find you that home. Thank you so much for watching. I appreciate it. Don't forget to watch my other videos over here. Don't forget to hit that subscribe button where you'll get notified of all my upcoming videos. And I will see you next time. Thanks so much for watching.